It is time. So we would like to begin Cyber Agent's full year results for FY 2018, ending in September 2018. First, we would like to introduce the presenters today. We have Mr. Susumu Fujita, CEO, Mr. Go Nakayama, Managing Director, and the Senior Manager of IR/SR Division, Ms. Sonoko Miyakawa. I would now like to ask Mr. Fujita to take the stage to make the announcement. Thank you for taking the time out of your busy schedule to come to this briefing session. We are going to be introducing the full year results. So we would like to tell you how we did this year. First of all, the overall results. We marked a record high sales of 419 billion, 19.5 billion, and the OP as well was 30.1 billion yen. So these are nearly in line with the forecasts. And if we look at the individual businesses, the media business, it is an upfront investment for the media business for us. So ABEMA TV, we invested in, and we want to pump up the sales as well. So at the fiscal results announcement a year ago, I used the word pump up, but we are increasing costs and sales as well. So as we had forecasted, we landed on target. And in terms of advertising business, as has been the case, this has continued to expand steadily. And with respect to the game business, the market overall is not growing that much. It actually has been stable. But for us, we have continued to increase sales as well as OP. So this is the graph for the full year. So from 2011, we shifted towards the smartphone. And if you look at the top line, it has continued to grow since then. On the other hand, over the last 2 years, we have made upfront investments in ABEMA TV, quite a significant sum. So the OP is around 30 billion. This is the number of employees. So currently, as of the end of FY 2018, we have 4,988. So we'll soon surpass 5,000 employees. And as a result, the personnel costs and advertising costs have also increased, so the SG&A has also come up. So this is the PL for the whole year. So currently, it's hard to actually have remaining profits. So we will introduce this later, but we have actually set a management index of DOE, which we will describe in detail. And this is a balance sheet. So in February 19, 2018, we issued convertible bonds of 40 billion yen. So that's why you will see a difference in the balance sheet. And in terms of the forecast for FY 2019, sales, we forecast 470 billion yen. So we will continue to grow at a double-digit pace. And with respect to OP, we forecast 30 billion yen again. So we will continue to invest in ABEMA TV, if we may. And as I mentioned before, the OP will be 30 billion, but the net profit, of course, our subsidiaries are making profit, and we're also incurring costs from ABEMA, investments from ABEMA TV, so it's hard to actually have any profits remaining. But as we've already announced, from 2017, we adopted a 5% or more of the DOE as a management index. So although the profitability may be slightly lower in the short term, we want to avoid the share prices coming down. So that is why we set a DOE of 5% or more. But DOE as a management index is a dividend on equity, so we will maintain shareholder returns through dividends or share buybacks. And this year, we will be increasing dividends to maintain 5%. Next, moving on to the individual businesses. As I mentioned, internet ads is performing well. If you look at the full year, this is where we landed. We are growing significantly. But if you look by quarter, it's remained. You may think that it has not been growing over the last 2 quarters, but in May, Cyberbuzz is a group company, but it became an equity method affiliate this May. That is why the contribution from Cyberbuzz is not included here. And of course, it's also, so these numbers are affected by seasonal factors, but we believe that we are still growing at the usual pace. And this is the OP, especially we have been investing within the sector to get national client, and so this has been impacted by hiring the people we hired, and that is why the OP is slightly lower. As I mentioned, we are making investments, but mainly we are investing in large national clients, advertisers. And in order to get national clients, we want to investing in net creativity, internet creativity. So we've established new companies and also joint ventures with other partners. Next is the game business. So if you look at the full year, it would seem like the growth is actually slowing down, but within the sector, we're continuing to grow. So we believe that we have the base power to continue to maintain our growth. And if you look at quarter sales, this is how we have shifted. As you can see, we grew slightly this fiscal year, but the portfolio has changed. So Princess Connect that we launched earlier in the year is contributing to sales, and only 3 days are actually impacted or accounted for, but Dragalia Lost was launched at the end of September. So we believe that this will start contributing to sales next fiscal year. And with respect to quarterly OP, we actually use a lot of advertising costs. So has been up and downs, but this is where we landed. And with respect to Dragalia Lost, this is a joint title we issued with Nintendo, and we can't really talk about this in detail, but within our company, it has been the best hit that we released in the past. So it's only been about a little bit less than a month since we released this title, but we believe that it's the best title we released so far, looking at the last 3 weeks of performance. And also, Dragalia Lost, we released at the same time in other countries. And we can't really talk about the percentages, but it's also performing very well in other countries as well. And with the addition of the Dragalia Lost, which has now become a hit, we now currently have 8 major titles. It is the 8th major title that we have. In terms of the future, we've already announced that Uma Musume will be launching this winter. The animation is actually very well received, but this side games title will be released this winter. And other than that, we announced at the Tokyo Game Show that we'll be releasing 4 new original titles. So for the next fiscal year, these titles will be hitting the market. Next, moving on to the media business. So as I mentioned in the last quarter, but if you look at the full year sales, you can see that Ameba blog was the main contributor, but the growth started to slow down, and then with the matching apps, it started to grow again. And this is for the quarter by quarter, but it's grown significantly in the last quarter. With respect to Abema TV, it has exceeded 34 million downloads. And we haven't really done any promotions, but we are continuing to see a healthy growth in downloads. And in terms of WU and total viewing hours as well, the base is also growing, and we've seen really good results recently as well. In terms of the users by age, this is what we expected from the beginning, but teens all the way through to 30s who are no longer watching TV, we have been able to capture. So there's a lot more seniors who are watching TVs, but we're actually seeing the opposite trend. And the female ratio was quite low in the beginning, but we're starting to enjoy 50-50 percentages, proportions. So women tend to pick up things a little bit later, and we also launched a lot of romance reality TV shows, and so that has impacted the proportion as well. This is a graph we only provide once a year, so please don't expect us to release this the next quarter. But as you can see, compared to FY2017, the sales has tripled. So in FY2019, we can expect even higher growth. But WAU and number of users, we will continue to grow these KPIs and expand our scale. And the other day, we announced that Dentsu and Hakodo have injected capital, and they will have 5% and 3% respectively of the Abema TV shares. So we are dealing directly with these companies, advertising agencies, so we believe that we can expect good results from this partnership. And this is something we announced this morning. Panasonic TV Viera will now come equipped with the remote control, will be coming with Abema TV button. So this is the second TV company that will be adding this ABEMA TV button to the remote controls. And to summarize, so we've invested in media and blogs. We've actually had to sacrifice profits as well as smartphone as well, but we sacrificed profits in the past. And right now, we're investing in video. So in terms of the profits, it's staying at the same level, but we believe that we will be able to reap the benefits, and we hope to have the firm foundation that will enable us to reap benefits in the future. And in terms of the main pillars, this is the same. It hasn't changed. We will establish ABEMA TV as a mass media. And in terms of the ad business, we will grow faster than the market. And the game business, Dragalia launched, and we're actually has seen end phase, but we will continue to expand our market share. Thank you very much. That's it from myself.